What's up? What's up? Good evening. It's a little late for a chart logic video, but I still got to get it out to you guys. Um, and today we're going to be going over mainly the same two um, things I've been kind of focused on more recently: the Dow Jones Industrial Average, as well as the price of gold per ounce. And I'm gonna start off with my analysis on the Dow simply because it was really straightforward and didn't put too much actual application to it or use to it today. But I always talk about, history repeating itself, and and not only that, but the probability of it possibly repeating, and also the probability of it not, right? So the focus of it all is that, hey, not every time that the price breaks below here are we going to see the grand push down another 300 points or plus, right? That's not necessarily, or 400, 500 points plus. That's not necessarily the motive of these videos, or of my trade philosophy. It's about understanding the possibility of it occurring and being able to bake that into the analysis and bake that into your actual execution as a trade. So in this case, I started off this trade kind of thinking like, hey, red box, weakness below 33 200s, we could potentially start to see 32 sevens. And because it's why? Because it's happened two times in the recent history, within a similar fashion, right? Within the first, two or three hourly candles, within a day. So I'm looking and kind of thinking of, all right, well, no real news is occurring today. No real impacts of it all. So it's possible that sellers may step in and try and push it back down. So I had this trade kind of set up, or my eyes set up on this position entirely, where we did kind of start to break down and push through there. But looking at shorter time frames, like looking at the 15-minute and so on, I was able to realize that my trend was not going to hold very well, seeming that and I'll go ahead and delete the position right here, seeming that this 15-minute candle actually ended up a bullish engulfing candle, showing that it completely ate the last candle here, and more wicks to the bottom as usual, which shows the plugging of the bottom of the ship, right? We don't want any water coming out and us possibly sinking or price decreasing, right? So that was kind of what I found in that scenario, is what was happening, and showing that there's a bounce region here as well. So I did end up taking a position here. I was not able to fulfill the entire move as to what was expected, but was still a profitable trade. And I was able to call that audible because I understand, and because of what these candles show me minute after minute, or 5 minutes after 5 minute, looking through that timeline. So being able to, again, identify the wicks and the importance of those wicks, I'm telling you guys, the wicks are very important to be able to be sound and be agile in your decision making, because you may end up deep in a position, and as you can see here, in the ensuing 5 minutes, the position goes entirely against you, up 200 points. And if you're not prepared for that in any way, shape, or form, you're gonna get stopped out, or so on. But so that's essentially kind of what happened today with the Dow. It's very important to look out for the bullish and bearish engulfing candles on the 15 as well, the 5 minute, to kind of show you where the leading candles, or where price action is leading and indicating to where in the future. And if we look at gold per ounce, a lot of action went on today, a lot of movements. So again, in similar fashion, once we break the 1808, 18.9 range, right, this yellow line here, we tend to see a consistency where history repeats itself, as I've mentioned before. And I'm gonna go ahead and kind of redraw this one real quick for you all. But boom, right? We see movement here. we see movement here, as well as today's price action shows movement here, showing that if price breaks above 1808, 1807 with great strength, that we could potentially see 1821. So that's you kind of looking at the scenario and saying, yeah, we can capture 70, 80 basis points, 13 points in total, if we start to see this bullish movement up. And that's essentially what happened. So just let's recap real quick before I even go more in depth into this gold trade, right? We saw an example where it didn't pan out, right? With Dow, where the history shows and the breakdown of what I thought was coming or ensuing selling, right? And then on the other side, we see that it works almost exactly to the point where within, again, in recent history, the break of the 1808 almost seems to guarantee a move to the 1820s, right? And this is kind of where a lot of times I think people who are trading or people who are just now getting into trading kind of get discouraged because they see or they try and they put so much behind it and maybe they end up losing their account because of that, or they may take a loss and get discouraged and never really even pick up the charts again. But you have to remember that this entire game is a game of probabilities where you may be wrong a lot, but it's about you being able to kind of dial back and really remain methodical within your positions and understand and make sure you check your sample sizing, right? Which basically means going through and seeing how historically price moves and what kind of patterns do you find and things of that nature to really, really be able to continually find scenarios like this where, we break the 1808 and we push into the 1820s. Why? Probably because there's buyers sitting there with, let me see if I could probably add a volume profile here. To see where, oh, no, I guess not. Okay. But let's show on a regular volume. Right? So we see large buying, right, up here. Heavy amounts of buying, 16,000 worth of buying that pushed us from 1808 in that time period. We see another 14,000 range here-ish worth of buying that pushes this up. And then in today's price action, we see about 8,000 worth of buying, which actually is significantly less than prior over here. But all in all, we see the spikes in the buying in the general direction. That coupled with, again, what do we see here? 15-minute and 5-minute bullish engulfing candles showing that, hey, we're pushing to the upside with great strength. And that's kind of where we're potentially heading within the shorter time period. And I think that's about it, honestly, for today. I think today's chart logic, rather simple, keeping it straight and to the point where history repeats itself, but sometimes it doesn't. All right? That's pretty much it from the agent today. Wish you all a happy new year if I don't end up, getting you guys another video before then. But hope you guys had an amazing holiday season, and let's print.